Business lines of credit 2023 and beyond up to $250,000 plus without collateral, and none of this 750 or 751 plus credit level like you'd see at top tier A banks or other locations. And they have become a little bit more lenient, so you could see lower scores and more, plus 0% interest business credit cards and a lot more for 6 to 18 plus months. You can use this as you choose for real estate investments, for payroll, raw materials and supplies, and a lot of other uses to grow and expand your business, to help you better well balance it, to give you a kickstart, to be able to allow you to use the funds as you choose, even be able to liquidate the cash out of these cards and do them correctly. And there are more options I'll try to cover at the end of this video through revenue-based collateral, equity, liquidity, and a little bit more if we have that time. I won't go too much into it. But before I get started, my name is Michael with Viral Funding Solutions. I'm a business loan broker expert, business funding expert, pre-underwriter / underwriter who's been in this space for a very long time, helping out a lot of businesses and business owners attain the right type of funding under the right strategic partnership and roadmap for longer term. And I understand, like yourself, the hardships of going through business. I started many years ago, like you did, leaving your 9 to 5. We're still working your 9 to 5 while you did your side hustle or your career that turned into this bigger business. You continue to grow it and expand it, or you go through its troubles, running up a lot of personal credit card debt, a lot of revolving debt month over month. You have to be careful about what you don't pay. All of these other things that come with it, the complexity of putting the business plan together, the proposal, and then just getting the operations and everything underway, cash flow, profitability, managing, accounting, all this other stuff. I had to learn that myself. And through all of this experience, I've been able to get funding for my own businesses, whether it's from personal credit cards, business credit cards, advances, government funding, and in other ways. So I know, like yourself, the hardships of going through a lot of this, and I've helped out plenty navigate. And before we go into this document, which I'm going to be going into in a second, we're going to be seeing different lines of credit for 2023, the details, the requirements, qualifications, expectations, and how to get started, how I would ask for documentation, what we can see on the back end, what is it better to do to make this as simple and easy and efficient for you. And so before any of that, a lot of people out there will overpromise and underdeliver. You have to be careful also, because there's a lot of outdated information, things that people are holding back or just don't know enough. They're experienced, but they don't share something with you. Perhaps they're trying to bait and switch you. And that's what happens with lines of credit right now, where I see so many people out there who do not have the right morals, values, mission, aspirations, beliefs, and they're just doing this for money related. I'm not in it for the money. I'm not going to say just for, that's not the reason. I'm in it for more impact. I care about you as in your health and your relationships, the two together, not one excluded from the other, the both together, inclusive, all in one. And also your wealth as part of that, not only for your business to be able to get enough funding, to be able to set off financially, better be prepared for higher services. And when you don't need funding, how does that look? Do you have enough cash flow, enough ROI? Are you generating enough revenue / sales? Is there a problem with inventory? Why is it? Is it a problem with sales revenue? Is it maybe renegotiating contracts? Suppliers and vendors come in, they go, they're waiting on you. The cost of goods sold, variable and fixed costs. Could there be something else within cash flow and profitability and more? And so I care about you at the end of the day, about how you are able to then go to bed at night. Literally, I kid you not, I can't sleep safely and securely knowing subconsciously and consciously that you are still stressed out, that this won't be in your best situation. And so why people turn to me, and then I'll go into this in less than 15 seconds, because of my loyalty. I'm a Libra. I'm very loyal. I'm very well balanced, emotionally controlled. Excuse me. I'm more of an introvert. I'm the cerebral type. I'm like the back end person who's pulling all the strings, but you see me a lot of the time on the front end. I like a lot of the back end stuff. I studied. I went to school, sociology a little bit, played Division I soccer, then moved into chemical engineering because that's what I wanted to do. And I did that for some time. And then I had to make a big decision. So I went into the business side. And thereafter, I didn't look back. I've worked in construction, manufacturing, warehousing, rampaging in my younger 20s, financial logistics, data, carrying boxes for a huge contracting company servicing HP and Peace Health, not physically gifted, but I've always had the strength up here and here. I just had to work on this a lot more, personal development, and I'm not a guru. So let's go to this document, and I'll go to any comments. This is a spontaneous live, by the way, so it's not like I broadcasted it. So not many people are able to join at this time, but later on, if you have any questions, please feel free to leave them down below in the comment section. And also there will be a questionnaire form. If you haven't filled this out yet, I'll try to show you at the end, but go through that link. It should be one of the first links. Click there, fill out some simple funding details after you select the button. If the layout is different, it will be. And then you fill out those simple details. You can go through the thank you page. You can even get started on the thank you page. There will be a way for you to go and streamline the process so we get everything on our back end. So check out that questionnaire. You won't regret it. There are many people that get that, and you'll get a very highly personalized, customized email response, usually with a PDF showing you your best funding option and options, thoroughly broken down like nobody else's business. And that information there is not even publicly released. And there's more to it too that you get through me, a free 6-step pre-approval lending checklist. So here it says open, and let's scroll down here, and we're going to go through these options. So there are multiple ones. Some of these are actually combined as one, as lenders are changing things. And just keep in mind, I work with the best lenders and underwriters. In fact, I've always thought about just becoming a full-time underwriter. That fits my personality more than anything. I look at documents every day. I go through bank statements, tax returns. I did that this morning. Bank statements, plenty of today. Tax returns, P&L balance sheets. I'm doing SBA loans, other funding scenarios like 0% interest, personal loans, term/installment loans, personal lines of credit that require personal tax returns so I can verify income and more things. But I'm consistently every single day in the trenches looking at documents, and I can be the guy who sits behind a computer without any communication with anybody. I don't need that stimulant. I know it's good, but for me, I can sit behind a computer and just get my head down on paper and look at all of these documents and really do a cash flow analysis, profitability analysis, better determine whether you are eligible or not, because I think like an underwriter does, and I know exactly what they're looking for. I can become one full-time, but because of flexibility, I'm on this end, and for your own business, it makes sense, and there's an opportunity cost. So business line of credit option 1, be a fintech lender. Perhaps you've heard of these fintech lenders out there in the world. Probably heard of Bluevine, Fundbox, many others, Headway Capital. There's so many of them out there we can go into. But whether there are a line of credit or are not a line of credit, they work in different ways. So it's not always appropriate for you and your best interest to just go immediately and apply to see what you can get. You want to know ahead of time whether you will or not qualify. What are the parameters, or in other words, what are the data points, or what do you really need to have prepared, documentation? How long does this process take? What should I expect in approval amounts? And those things I'm going to be getting into in a second. So I can work with direct lenders all day long, but I also have indirect lenders. And another way of saying there's a brokerage setup where you go through here. I already have those direct lenders anyways. So when you submit everything, we're working at it on the back end to determine what's the best fit. There might be 2 to 3. There might be 1. We know because you're an A-tier client or a B-tier, C-tier, D-tier, and we can go even beyond that and better determine what is best for you, and in competition to even get you more maximum approvals at better terms and at better rates. But everybody has a wrong misconception around a lot of this, and in this market, it's better to go down that indirect path. But if you go to the wrong place, that's the difference between getting the most you can and not, and having a strategic partnership and roadmap for longer term. A lot of people, if you ask, well, why did you turn to them? They'll tell you, all because they told me about their business. They have a lot of this. They have a lot of that. Yeah, but did you ever at one point ask why them as the person, or why the owner? Do you know anything about them? Like, what it comes down to is more than just the business and getting the best option, because I can usually do that for people and I beat the majority of options out there. It comes down to character. At the end of the day, what you need to be more concerned with than anything is the character of the person. And why people sit with me, like I said, is because I'm not your typical or average broker / pre-underwriter, underwriter. I actually go far and beyond, and I do things that are very energy and time efficient. I'm very punctual. I'll give you the benefit of the doubt. And so knowing me in a little bit of that goes a far ways, as I said a little bit of that earlier. And I was on unemployment at one point. Like in that financial logistics position, I had to go on unemployment benefits again, not to my own doing, but because they really 50 plus people. And I didn't have to stick to that. But at that time, I started to build a business even before the company went down under. But I hated being on unemployment benefits, food stamp cards again. I couldn't even go up to the register and look the person in the eyes directly. And then I was so relieved when I walked out. I'm like, well, I think I got to do this again. But at that time, I was preparing. And like many of you, I wanted to start a business. So here it says you can even combine this with a lump sum with a hybrid advance / term loan option. And so just keep in mind that a line of credit, it's not just exclusive. So if there's a way for you to get a line of credit, but also give you a lump sum, let's say you have variable reasons for raw materials. You have all these materials and supplies, price, wage, labor cost, price, wage, and there's other things that we look at. Or maybe it's for fixed variable uses for equipment. You're looking at getting a down payment or purchasing equipment and you need a lump sum, or you're moving to a new storage facility or a new office or a new commercial building, or it could be for inventory related. It can be for marketing and advertising, fixed costs. It could be for a lot of different things, securing contracts. The list goes on and on for each industry. So we look at going for a line of credit. Can we evaluate you for a lump sum of an advance/term loan? Is that possible? Or would it be a bank loan at that moment? Would you even be able to qualify for a bank loan, an SBA loan? Not everybody does, and it's not always in your best interest to go for all products at once, or it is depending on how much you can get approved for and how much you actually need at that time. So a lot of lenders want at least like a $10,000 amount in an account for at least 6 months and more like time in business, but that's not always a requirement, especially with fintech lenders. You could see that more or less like bank loans or bank lines of credit, even less of a 10,000. But in this case, it's not always going to be that. So don't always expect that you have to have that. It would be better that you have enough money, because if you have better average daily bank balances, that'll factor into giving you an approval and giving you enough of an approval. That matters a lot. Ending and starting bank balances and more things, and things that I can calculate on my end too. So I go here. What do you think about getting approved between 6,000 to 100,000 and using the funds when you want, as well as getting approved between 50 to 150% of your average monthly sales? More so, it's between 40 to 60% or so. You can use the funds however you'd like and use as much as you want. This is a perfect way to utilize for all types of funding. So in case I just didn't say this, for the lines of credit, these are more of a you withdraw and you use as you need. You're not going to get interest right away as you don't use the funds. You only pay interest on what you use. There's a withdrawal and there's usually a fee. If there's a monthly fee, it's because you have that not as bridge money, but it's used as a line of credit for longer years. And you have longer projects with increasing ROI that have a longer dated ROI and more things for net cash flow and other purposes. But those aren't always given for everybody. It just depends on how you use it. And you could evolve into that likely over time. There's a chance there. Not for everybody and for every industry, but that's how it works. So you take out 8,000 out of 20,000, you're only paying on that $8,000 until you pay it off, and then it goes back into the full 20,000. So you have 12,000 remaining, but when you pay off that $8,000 over the schedule that I'm going to be getting into here soon, then it stabilizes itself back to that 20,000, if that makes sense. So it's very useful. There's a time and a place for these, as well as for lump sums, especially if you can't get a line of credit. You can treat a lump sum as a line of credit and put it in a different account, but yeah, you're paying for it. I get that, but you can almost treat it that way and withdraw from there. But it has its place. Not everybody can qualify. It's become much harder in this market to qualify, especially with restricted industries. There might have been lowered credit requirements with fintech lenders, but because of the industries and certain other details, they're going to ask for a little bit more. So that's normally the approval amount that you'll get between your lowest monthly revenue in the last 90 days, even 6 months. And then there's also an average within the 3 or 6 months, more or less 3 months. We look at those two numbers. We look at a few other factors as well to see how much you can get approved for. At a bank, just so you know, typically with those lines of credit, not all of them, but you're looking at about a 10 to 20% of your top line revenue that you would get approved for at a bank. And just like when you do online lending, a lot of the times you do see 10 to 20% of your annual gross revenue is what you can get max approvals for. But you can use the funds however you'd like and use as much as you want. This is a perfect way to utilize for all types of funding. This is a perfect way, Details, the terms for this one, and this is one that's come up recently. This is one that has been changed a little bit. And so with the lines of credit, out of all the other products, are normally the ones I see changing a lot more frequently with terms, with specific rates, and subject to change because of prime with banks and other things that they have to look at. But for fintech lenders, you can see a little bit different. Payment type equals weekly or monthly. We'll decide if you get a weekly or monthly if you are in the sweet spot or not. The sweet spot details I'm going to go into are down below in this other section, but give me a second to go through this first. The monthly fee, that's equal to $20 there. There's a service fee for $20. It's easy to understand draw fees, balance fees when drawing funds or maintaining a balance owed. So I have things on my end where I'm able to see how much the client draws or how much, what does it look like in a remittance if I have that? What would it look like over 6 months, 12 months? It's like I'm doing a reverse debt consolidation, which is a whole different product, or if I'm looking at a different schedule for an online bank term loan, all these other things. No prepayment penalties, plus big savings with early payoff, which is great. You can save on. No collateral is required for any of this. There are collateral requirement products, but I won't get into it in this. If we have a little bit of time after these are done, I'll go into some of the collateralized options where they can go over 250,000. But for the majority in this market, you're going to see approvals up to 100,000, between 6 to 100,000. If somebody goes, you can get up to 250,000, like I'm going into it here. The majority of the times in this market, you're going to be seeing up to 100K. And in the majority of people's cases, beyond 55K is hard, beyond 35K is hard. So that's what I'm seeing, between 35 to 55K at its highest, sometimes up to 100K. But up to 100K, you've got to be doing a lot more in monthly revenue, and not just 100,000 per month. You got to be doing quite a bit more than that, closer to 400,000 or 500,000 plus, if not closer to $1 million in this market to even be able to give you something like that. It has to make enough sense. And it's become harder. A lot of people are pulling lines of credit from banks. A lot of problems right now in the economy. Even credit card debt is going up higher, and banks are wanting to issue as much as they can, but it's become a lot harder for people to get approved for, and they're picking up their credit requirements, and it's become a lot harder again. You can lower your weekly, monthly payments by drawing out more. So what this does is it'll reshift your remittance. So if you don't have one balance that's paid down yet, you maybe have from 8,000, you have a remaining 2,000. If you needed more, you can always draw more from what you currently have, not the full 20,000, because you have a pending $2,000 out. So about 18,000 you have to work with, and that can readjust the schedule depending on how far you already are down within your first one or your second one, or however much that is. So that's really good. Longer terms can keep your payment down. And also, by the way, that can also increase a little bit. As you have more out, it can also increase the amount you have to pay for per week, per month. But they're a lot lower than you would be paying in a lump sum. A lump sum, you'd be expected to pay back like 2,000 per week, where these you'd probably be expected to pay back $120, $150. Now you take out more, there might be more added depending on that first balance. But the thing is, you just get to save more. You have more cash flow because of that. You're not having to worry about another loan or an advance being taken out of your account if you're depositing already irregularly. And this is a great option for that, to help you stabilize your business for seasonal issues, fluctuations. But there's a lot of other uses. So longer terms can keep your payment down. Balance fee is anywhere around 1% per week of the balance. So for every week you have it open, you are charged a 1% fee on the remaining balance, and it can be as low as 0.69%, and it can be as high as 1.39% per week. So let me move this over here. Withdrawal fees can be anywhere from 0 to 3% plus, depending on your file. If you are in it for the long term and want small monthly fees and so forth. I've even seen those numbers shift and even go a little bit less than that. So it's not always going to be the same application when it comes through those sequences. And sometimes you see the 0.69 to about 0.79, 0.96. You can expect to see that a little bit. And sometimes these things change. So the approval amount can even be for a draw fee from 0 to about 4% included. So not always 3% at most. Okay. Sorry, I'm looking through my other tab to make sure I'm not missing anything from that document that I didn't put here, because these things always change. So withdrawal fees, as you saw, that 0 to 3, 0 to 4% plus, depending on your file. So there's an example there, 0.69 to 1.39%. Interest cost of funds, for example, let's say you get approved for 20,000 and withdraw the minimum of 1,000 with a 3% draw fee, which is $1,030. Then that's divided by 12, 18, or 24 months, depends on what you get. So we divide the 1,030 into the weeks within the months. So let's say you get 12 months, which is 52 weeks. I know this is a little bit much, but I'm just going to speed through this. We can go through this in time, and I can even share this with you a lot more based on your circumstances as well as in the questionnaire, if so, and more. But that's $19 plus cost of capital, which is interest. If 0.96% weekly cost, then you'll pay $115 per week. We're not going to break all that down right now. We're going to speed through this because of time. But I got these numbers from taking the principal of 1,000 with your draw of 3%, which you owe $1,030 on your balance, and divided that by the 52 weeks, because that's how it's amortized if you were on weekly, because you got 12 months. And then figured out your interest cost of capital to be in the 0.96. This is a number that's given to you based on your risk, your credit, and other things that we better determine. The lender better determines on this. So $1,030 divided by 52 weeks equals 19 plus 0.96 times 100, which turns it into $96 after we convert that percentage. And we add the two numbers, that gives us $115 per week. You'll be paying until you fully used up your principal of $1,000. That makes sense. I hope that makes sense there. It can sound a bit confusing, but it's very straightforward. It's an amortization thing, which is a jargon for your weekly repayments and how they will be calculated. And I put a few examples here. An example, 10,000 minimum withdrawal fee at 0.75% interest for 12 months. That's 52 weeks at a draw of 3%. It could be 4% or so. Then 10,300 divided by 52 weeks equals $198 plus the cost of capital to account for. And that interest that we calculated, then it is 0.75. Then it's 0.75 by 100 again, plus, and then we get that 198 number. We're going to add to that amount, and that'll give us $273 per week until you'll be paying until you used up your full principal of $10,000 there. So I give you a few more examples. I'm not going to go through all of these, but you can see them on screen there. If 18, if 24 months, and then a monthly payment schedule. Let's see for up here. That's $460 plus or minus for the first example, $1,092 plus or minus for the second, $912, $780 plus or minus, and it can be even higher depending on how much you take out and how much you use, how much has been going over. So it just varies a lot. So preferred line of credit requirements and what I'm seeing right now in the market. So credit limits are between $6,000 to $100,000. Getting above $100K uncollateralized for anyone, like I said before, is very difficult in this market. Even higher tier revenue clients with a line of credit are getting theirs pulled back. And if you have too many of them, you can have a bank one, you can have a fintech lender one. That's okay. I've seen that happen, as well as multiple fintech, but it's not always going to happen. Have a minimum of $200K in annual gross revenue. So we're not asking for having 400 to 500,000 like in other cases. So this is a great point of emphasis. A lot of the times still with specific industries though, you'll want to see closer to 400 to 500K and above in annual gross revenue. And even in some like 750 to $1 million and above, you've seen that with banks, even with some fintech lenders, they're going to require that in a specific industry, specific financials that you've provided us with that we track back as far as we needed to see how much cash flow you'll have, how much that you had before, what it'll be projected depending on the amount that we're going to issue you, and more things like that. So don't always take that as a grain of salt, but normally have a minimum of 200K in annual gross revenue. So that's a drop. You can see it'd be less. Have 1 year time in business. All the times you normally want is 2 years. So I'll get into that in a second, but 1 year, it can be sufficient. The sweet spot though, for you, the merchant, in other words, is this: have 250K in annual gross revenue, 2+ years time in business, 675 plus FICO Experian credit score. And it can be as low as 625 with like kind of an asterisk there, because not everybody's going to get approved at a 625 level, especially if you're in the wrong industry, you're up and down with revenue, financials don't look clean, balances, missing payments, already on your credit, you're missing payments, you owe somebody else payments, missing mortgage payments, auto loan payments, all these other things. Like it could be one or more. That's enough to say that's not going to work. And there's so much more at risk right now with a lot of industries. So being in the sweet spot doesn't guarantee a monthly line of credit. So when I said earlier it's weekly or monthly, how you would get a monthly is if you're in that sweet spot. That would be a monthly line of credit. It improves your chances though, and approvals depend on a numerous amount of factors such as possible disqualifications here, high debt to income ratio, which is a little bit different because we factor in a lot more of that with utilization on each of the revolving accounts. When it comes to DTI though, that's more of a like personal loan type of scenario where they're going to look at DTI. We're going to see a lot of that. History of late payments, huge. Too many inquiries, that can be bad. That also increases your risk, can decrease the amount you get, and then the type of approvals. Credit utilization ratio is too high, as I mentioned earlier. You have an existing line of credit. It might be that you're already over leveraged with a lot of this. Credit report issues that need to you need to prioritize credit repair instead first, as I have a lot of people in credit repair and people trying to go through that to make sure that they lower their risk and clean up their credit, report what needs to be reported. That would be the first place to begin, is know your credit, know your reports, know what needs to be disputed, what can't be disputed, what shouldn't be. And that'll cause problems if you disputed something that was already accurate, especially underneath your personal credit with credit cards and other things. Recent bankruptcies, charged off accounts, etc., things like that, things that haven't aged over 5 years, 4 years, 3 years. Is it a personal or a business bankruptcy, foreclosures, charge off accounts, overdrafts, many different things, late payments, go on and on, etc. Restricted industry, so derogatory stuff up here. So the restricted industries, in this, There are going to be higher risk industries that will not be eligible for the product and the product feature. And these are construction. This is all construction classes. It does not matter if you're doing tiling, you're doing roofing, are you in plumbing, all construction trades will not be able to qualify. Now, if you're doing like 100,000 in monthly revenue with 700 plus credit over 2+ years, 3+ years, there's a chance. There is a chance, but it's not to say that it'll work. A lot of the times right now, it is hard to get approved for a line of credit if you're in the construction space. There's too much fluctuation, too much irregular depositing schedules. There's already a lot of missed contracts, not getting paid out on time, receivables. That's why lines of credit are useful too, to make up for receiving invoices and things you need to make up for having enough cash flow and continuing other projects. So it's a lot of stuff when we talk about progress billing or the type of unpaid invoices, inventory, a lot of this other stuff to be cautious for, supply chain issues, things that drive having those raw materials, and a lot of this stuff and other things through supply chains and where they come from in other locations. So you have transportation and warehousing. All trucking/transportation will not qualify for the line of credit. Not well, but if just won't work. And this goes amongst a lot. It could be through bank loans, fintech lenders. A lot of the times they will not approve. A lot they want to see over 5+ vehicles, over 10+, closer to 100,000 per month in revenue, not even just 50,000. And even then, it's still hard to get approved for. Wholesale trade, import and export. I don't have to even say anything about this, but that can cause a lot of issues with supplies, materials, with shipping costs, regulations, a lot of things changing in import and exporting of goods from one country to the next. You have a lot of things that are in inventory tied up on a different country, but you don't know if you're going to, there's just so much speculation right now when it comes to importing and exporting. Buying in bulk, wholesale, a lot of that stuff in general is good though. Accommodate, and what I mean by that is not going to get necessarily approved, but isn't if you're purchasing like that. Accommodation, food services, these include restaurants of any kind, real estate and rental and leasing, all real estate. You can talk about fix and flips, a lot of property management companies, that holding companies, maybe that you're a broker in any capacity of buying and selling, holding, a lot of the stuff, passive investments more than anything, a primary home residence. A lot of that stuff will typically get you declined for. Mining, oil, and gas, that's very strict. That is a huge risk industry, and you see a lot of the pricing changes and how fuel costs. But keeping all of that, the chemicals and the higher risk of a lot of that stuff, you have to be cautious about. Administrative support, waste management, remediation services. So some of this stuff too, you also will see underneath like bank term loans and other services, even the lump sums of fintech lenders, advances, things like that in some cases. Best for, this would be retail, healthcare, marinas, repair shops, e-commerce, metal fabrication shops, and more. So those would be great industries to go after, or in other words, that you would want to fall under. When people ask me what's a great up and coming or what's something that works well, I'd say anything in healthcare, like home caregiving, adult care is huge. Those businesses are always stable. There's always a lot of people. Healthcare technology, somebody asked me the other day, what other healthcare technology? Anything that you can infuse, IT, tech, different gadgets, products, apps that will also improve healthcare. That's what you want to do. Anything that includes doctors, dentists, veterinarians, chiropractors, home healthcare facilities, as mentioned, individual home healthcare companies, there's that too. And the marinas, as I mentioned, boating repair shops, things like that. You also have like salon shops and things like that, repair shops, insurance, accounting, architects, education, dance studios, gyms, medical equipment sales, e-commerce could work. And there are more, but that's just a small list that I wanted to put on there. So let me continue with this. Note 1, if you'd like to get a line of credit, we can also evaluate you for a cash advance/term loan, or it depends on what sequence you will go through and how I ask for the documentation. So it might be a line of credit with the bank, or it might be a fintech lender line of credit, and then you go through a bank term loan or an SBA loan. So there are different situations for different places we can get on our back end. Or you can take one or the other. I showed you that option. This is a little bit different to a different circumstance, but there's going to be little details on how to move forward. Line of credit approvals are lower, as you've seen, and then even bank loans on lines of credit can be lesser. But with the lump sums, a lot of the times, because they're basing it off of your average daily bank balances as well, they can do like 40,000 you have, let's say, for example, on average, probably going to give you 100 to 200,000 and above. Because of that, they might even be able to 2 to 3, 4 times X that. Plus included collateral is something else that you have to account for, and that's why the approvals could be a little bit higher. Documents needed, you can see here, 3 months of bank statements, 4 months of California and other states perhaps. Nowadays, we're seeing 4 months just for about every state. There's disclosure laws and new ones that have come about at the ending of last year and going through this year. So this stuff always does change too, like the amount of bank statements, but you might see it in your state too, where it's going to require you to ask for that, and I'll update you if anything else with other ones. There are plenty of other ones now, but through our app sequence, it's very streamlined and you'll be able to see what you need to have prepared and things like that. Voided check, copy of your driver's license. A lot of the times you see is a soft pull throughout the process. If there's a hard pull, you'll be usually notified from your consent because something came up on your file. We needed to make sure this was accurate. How long ago was this removed, disclosed or not? There's little things like that. We have to account for more information and more history. Note, you'll be able to safely and securely upload your documents needed online with our streamlined and hassle-free application process, and we get them on the back end, so make sure you have them all together before for a faster process. Otherwise, you can save and continue later, or you can always send them to me via email, and I'll send them to the provider, the lender, et cetera, organization, and how it all works on our back end and what's going on there. And there's different ways that I'll request that documentation. Sometimes I'll say it's better to do it this way, or for now, how they would require it for these lenders, it's better to do it this way. You can get the best look and we'll protect your credit at the same time. So there'll be some instructions there, some extra content. There might be a link, or it might be asked for in a different way to submit to me here. It might be a PDF. A lot of the times it's online stuff. So business line of credit option 2 via fintech lender, similar process, and looks like what it looks like just before that. Some different details. This is a little bit older. This may still work, but it's the first one that we went into that could be combined with the 6,000 to 100,000 as an update. These are automatic weekly. Hardly monthly is in this market. Usually you do see weekly though for the majority of the time, just so you know, sometimes even daily, but mostly weekly. Well, sometimes monthly. No prepayment penalties, but plus big savings with early payoff. As I went through some of these options, this is just different examples here. Qualifications, as before, it was 15,000 in monthly revenue, but a lot of the times it's 40K to 50K plus per month, 550 plus owner FICO credit score. More so though, 700 plus and above. 1 year time in business, but 2+ years is preferred. And you see here just more or less what I went through in the previous one. You can see a similar format, so similar process. Business line of credit via another fintech provider / organization. But this is one that I normally don't recommend. Not most people I recommend going through this for different requirements for the look that you're going to get. But you can see that there just at a nutshell, just higher monthly depositing, and you could ask for higher credit minimums and other things. So I don't always recommend that option. It's not always the best one. So continue. There's a little bit more. Revolver. You see that there. So if you default, UCC can be filed, and so that it can hit your personal file and affect your DTI then. So it's different when you do default on things like lines of credit, term loans. A lot of the times that'll show up then on your credit report as that, which is normal. So you see that there, quicker applications, quick application process, what would be required, recent business tax return. Sometimes we will request a business tax return for things. But over here now we have via an online bank term loan, FDIC insured and things like that. And I'll tell you whether to skip it or not. So there's a little bit of additional information depending on your file and what's customized to you. And then I might say, check out an SBA 7A loan or an online bank term loan if this one were not to work. So I'm going to skip out through these details here. And I'm going to go through the bottom here. So offering lower monthly payments and competitive rates. Keep in mind that this is through a bank. Once an application is approved by the bank that myself, team works with, processing times can be delivered in a matter of days. The loan amounts here are between $25,000 to $150,000. 12-month term, interest only. So you're not going to get that 12, 18, or 24-month term. Most people end up getting 12 months anyway, 6 to 12 months. To begin with for the most part. Monthly payments, and that's not looked down upon. 12 months is more than enough. Monthly payments fully funded at origination based on the approval line of credit on the approved amount. Revolving structure for flexibility. You pay back and draw as you need. Underwriting, it's based on bank statement data that we'll look through. Pricing, variable rate based on SOFR as low as SOFR plus 9.9%. Options at maturity, 3 new line of credits that extends interest-only periods for 12 months. So that's a good advantage. New 3 to 5 year term loan to refinance principal if you needed to get a term loan to refinance anything else and you need to clear things up. Full payoff. Fees to the borrower, as in yourself. 6% origination fee based on the approved line of credit. No fees for subsequent draws on the line, so you don't have to worry about that part. Pre-qualification requirements that you must meet. This is 660 plus FICO that we're looking for with 2 years minimum time in business. And we're looking for a 150 plus liquid credit score. That's FICO SBSS. And that's normally the requirement when it comes to a lot of these is they're going to ask for you to have good liquid credit. So making sure you check your business credit, that's most important. You won't always get that score, especially if it's not generated or it's not enough. And they don't always disclose that. So when it comes to revenue, it's best to be at least at 250,000 in an annual gross revenue, if not more. So that's what we're looking for the majority. Details continued. Your monthly payment increased possibly substantially if you're approved for another loan product. Required documentation then includes for you 6 months of business bank statements, a current business debt schedule, an identification document, and voided business check potential tax return that would be asked for like other banks would. Documents required to close, voided business check, and driver's license or other identification document. At 12-month maturity, you may choose to apply for new financing. Updated business financials will then be needed for underwriting. New financing after 12 months will incur additional fees. All loan programs are subject to credit approval, income verification, and then the collateral evaluation. And then paying the minimum interest only monthly payments will not repay the principal that is outstanding on your line. The bank makes the final approval decisions, originations, and services all loans. Additional restrictions and limitations, as you see, that will then be applicable. Fees, as I went into that, at one time, 6% origination fee, closing at a flat 750 closing costs. Standard wire transfers, then they may apply. While some lenders, they do charge additional fees for drawing on these funds that you have. The line of credit, there are no additional fees or withdrawals, as I mentioned earlier. There is a soft credit pull conducted at this part for the pre-qualification. But however, as we go through the loan application process, the lenders whom we work with will request your full credit report on one or more of the consumer credit reporting agencies. And at this point, it's considered a hard pull and happens after your application is in the funding process and match with the lender who is likely to fund your loan. And we'll find that out and what's in your best interest. And so that's how it works throughout the process. And that's what you would normally expect with a lot of bank lines of credit. Application, I'll have you go through this process and maybe we look at different services at the same time on the back end that we can try to pair up with the line of credit. Another one with an FDIC bank. Details, the rates range from 8.9 to 12.6%, as you would see with the last one as well, more or less. And our approval rates exceed 70%. This low-cost bank financing option allows your business to grow and thrive, or however you need to use those funds. Just imagine what lower-cost financing could do for your business. It could do a lot. It's done a lot for mine. Here are the requirements to meet. You want to have, instead of just 660 on FICO Experian, one of many, you want to have 660 FICO minimum on all 3 consumer credit bureaus. So it's not only on one, you do have to meet the 3 on all. And the difference is with this is not going to normally require you to have the business liquid credit score of 150 or 155. In fact, none. A lot of the time, sometimes, but most of all, no. And it's going to make up for it within the 3 credit scores and what we need to look at. 2 years minimum time in business, similar to what we've seen before. 250,000 plus minimum annual revenues for the last 2 years minimum, and that's kind of what we went over with some of the other ones before. Industries acceptable are all except cannabis-related businesses, and I'll leave that to interpretation. Anything with vapor included, and that can even be something that declines, nicotine, things like that. Eligible states, all 50 states. Note, many times with bank term loans and even lines of credit with the specific providers, you see FICO, SBSS, business liquid credit needed. So a 155 or so FICO, SBSS could be asked for, but not normally, like I said. Or even just a paydex score is what they're going to be looking at. They're going to want to make sure you have at least a 70 and above. Even without this, we can still try to take a look. But a lot of the times you'll see with this, instead of the liquid credit, they're going to look at the 70 plus on your paydex. Terms. The line of credit may not have a maturity or term. Offers and terms, they're based solely on the qualifications on each person, you from the next person. from you having multiple credit or there's multiple owners. It's preferable that we have each owner have 660 and above on all three. If not, that doesn't necessarily mean you'll get a disapproval. It just depends on how much majority owner and depends on the financials and a few things. But because I've seen people even get approved for a line of credit, even with the other owner, second or third, however many have lower credit, even through banks like Chase and things like that. Each offer will be explained to you in detail so you can make the best decision you can for you and your business, as well as your unique situation. It could be a 12-month term or less, as you'd usually see, if not more, sometimes in cases, maybe up to 18, 24 months. Only pay interest on funds that are drawn down or outstanding, and only for the number of days the money is drawn by you and your business. Payments are monthly, never daily or weekly. That's the difference within this one than as the other ones. So important notes: any owner with at least 20% or greater ownership stake will need to pull their own free credit report, the full report, not just the summary. I highly recommend using Experian, although there are other ones out there. If you pull your own free 1,500 to 100 page plus PDF report, it will not count as a pull on your credit. If we do so, it will. So please do it yourself. That's what I recommend. No hard pulls until you go to closing. All owners with 20% stake or greater should ideally have a 660 FICO credit score with all three credit bureaus. If not, and only one business owner can meet the 660 minimum, we may still be able to make this work. We have to account for other low costs that we could have, bank credit facilities where your file may still be looked at and could go and process through. Having existing debt is fine. Many of the applicants that I get that keep going through this, who've come through, are successfully funded and have existing debt at the time of their application. Having the debt does not automatically disqualify you. It's another data point for us that helps to have along with your company's other specific metrics that will be factored into your approval and the approval amount and all of that. The question you should look at, what we'll be asking is, can you easily afford the existing debt and potential new debt? Many times we will get a decision of a yes or a no in 3 to 4 business days. With fintech lenders, 1 to 2 days, sometimes even between a week. Even with other ones, sometimes it can take a couple of weeks because they're banks. But even then, it could be a little bit less than that. Other times it's a bit longer. Good news is that usually we have declined files come back sooner. So in theory, the longer we hear nothing, the better the chance an offer will be extended. Is there a personal guarantee like others? Yes, there are. A lot of this is personally guaranteed. With anything that you do, business lines of credit or not, a PG, it's not going to fall only on your EIN or your LLC and the time in business and the age LLC, S Corp, C Corp, corporation, or whatever it's under, it's divided by. But we're factoring a lot of that stuff to make sure that you are a legitimate business and how your business is being ran and managed is important for us. And to be able to track cash flow, to be able to understand how money is moving, what amount of output you're having in relation to the input. A lot of different variables to account for because you have more of an output and you're moving in terms of volume. You're looking at economies of scale and all of these differences. So there's a lot more to account for. And so PGs are normally there. Don't think that they won't be. That's just a requirement. Be accountable and be responsible. It's not just going to fall on the business, or it's not going to fall on the business entirely. Have a PG. Is there anything else out there without a PG? Really, honestly not. Be careful what people are sharing with you. If you get a no PG, okay, well, how high of a cash flow, profitability, how much time in business, DMB scores, all this other stuff. But even then, it still won't normally happen. You'll want to go through business, trade credit, vendor credit, and that's not like cash you can use or a credit line and things like that. It's when you're getting vendor credit and you're getting being able to make payments and purchase supplies and things like that is a little bit different. But a lot of the times with those, there's no PG, and it's again not the cash and anything like that. So sometimes the business applicant is strong enough as a business only to borrow funds without the owner's personal guarantee. As I mentioned earlier, we might be strong enough with cash flow and all these other things, but even then it's still hard to get. Other times it will make the bank feel more secure to have ownership PG or PGs included. Each scenario will be different. In either case, if you plan on repaying your debt, it really shouldn't matter, and it shows responsibility, accountability, and maturity, obviously. No collateral to pledge. All credit facilities being applied for here are for unsecured financing. This typically means that you as the borrower are not required to pledge collateral to secure the transaction. However, though, and this is common, Many banks will still place a UCC lien if there's a 1, 2, if another one needs to come in. You kind of see that with cash advance and stuff like that. On the general assets of the business, this will do two things. One, it establishes the bank as the lien holder for the legal purpose and purposes. And then two, it alerts other future lenders that you have an outstanding debt, which can serve to help you avoid getting over leveraged in the future. They're going to think, okay, you haven't filed a UCC lien. They're going to take first primary lien on those. And that's not going to be good if you have other ones out there. And let's say you don't make the payment or you default, like, hey, you can't go and dispute that because it wasn't accounted for. And then there are other reasons too. How to apply. If you meet the qualifications, here's normally what I will ask for. For this one, a one-page fillable working capital application. I can send this to you in time if it were to be the best and right option for you. I'll show you a lot of this stuff. You then have to go through Experian.com and download, or how you download your free credit reports and report. The full report can be anywhere from 15 to 100 plus pages. As I said before, 15 to 100. Please download the whole report into a one-page PDF document format. A copy of your SS4 IRS form showing your employee ID number for your business. 6 most recent business bank statements, all pages in PDF format. Please send each month as a separate PDF attachment. Your articles of incorporation. You could even say their certification of formation within your state, but the articles of incorporation there. A completed business debt schedule. I can send this to you in time and how I would need you to fill this out. What are the categories and all of that. A copy of each owner's or the owner's driver's license, front and back. A clear cell phone picture is fine. 8, a copy of a voided check or bank routing/accounting number info, whichever way. Once approved, the banks will wire your financing directly to your business bank account at closing. The title on this account must match your application. There are no exceptions to any of that. So there's that. And then I have another one here that I wanted to bring up that is on another screen. So give me 1 second. And again, all of this information and more things, if you guys need to gather from what are your other options, what could be your best options, is to fill out the questionnaire. And if you have already filled out that questionnaire and I have responded back, then you would know that. If I haven't, in time I will. I do get quite flooded at times, but you want an expert to work with you at the end of the day. That's what I would want. And so I wouldn't want it any other day, any other way. So here I'm looking on my other page here. Let me go through this one really quickly. This is in another document. 1 second. Okay, let me do this. And now I'm in my email inbox looking through something that I had in there before. I can't show that because it's privacy. But let me make sure I get it. Okay, it's not in that one. Okay, it should be right here. For a different business line of credit. So here's another one that I'm going to just walk through here because I'm going to put this on the screen that way. So this is an exception. This isn't always given. It's not always out in the market. It could be at the time, but there is a $50 million to $2 billion business line of credit. This is for those higher preferred clients, bigger amounts, bigger deal sizes. So don't expect this to happen to you. But the interest rate range is 5 to 7% fixed. So you can see that a little bit less. That can be then changed because of prime rates now. But a lot of the times you can see it low enough. Excuse me. This is a 5-year term with interest-only IO payments, offering exclusive access to established direct lender with an A+ reputation. And they do not want to deal with the public directly. They don't even want us mentioning exactly who. So I stick by that when they bring that up to me. Here, let me move this. Okay, I did have it. So the deal sizes for this would be in what I have in my document over here, a minimum of 50 million to 2 billion. This is unconventional structure. The lender takes first lien in the project collateral property, although not all projects require real estate collateral. The transactions with collateral or commercial real estate, to be specific, collateral have a much better chance of an approval if you're going to offer up real estate. That's the case for this. So it's somewhat similar you'd see in a bank situation, but transactions with commercial real estate collateral have a much better chance of an approval. So the purpose of this you can use for acquisition, for refinancing, ground up development, and or business expansion. The geography of this, including it is global, including both US and select international countries. So this is a big piece here where in first, most people in Canada and other locations wouldn't be able to get a line of credit through this side, but it's a little bit different here with select international countries, both US and selected international. Asset classes, this is cannabis, multifamily, retail, mixed use, office, gaming, hotel / resorts, portfolio, renewable energy, oil and gas, raw land. So if it makes sense, it makes sense. And you can see there's a little bit of a cannabis in there where others wouldn't be able to qualify for more lower lines of credit. You also have the oil and gas, mining oil and gas, where you wouldn't be able to qualify for another one. Hotel resorts, raw land, anything that's real estate included, and things like that. That would be helpful. Percent of financing that is offered. This is up to 100% LTV, which is huge. LTV financing on that. Recourse, is there any? There's non-recourse with standard bad boy clause is what's given. The prepay, there's no prepayment penalty. This is a 30-day notice that is required. For borrower liquidity requirement, you have to have 20% cash liquidity required to be approved by yourself, as in the borrower or borrowers, or however that could be supplied. The 20% then is deposited in an ICA account to be then held in an FDIC insured bank. That's the process. At the time that the loan docs are signed, the ICA account is a transactional account that will allow the lender to draw out the interest or drawing the interest out of that account that is held in at that point. Please note this, that unlike an SBA transaction, the borrower can create this required liquidity by using bridge loans, other temporary financing that's in that account, that's moved into that account or was already there, or any other method that is available to you, which is huge, because with other ones, a lot of the times they wouldn't allow you to do that. I'd look at it differently. Interest is charged only on access funds, like we've been talking about lines of credit this whole time when they do that. The term, it's a 5-year term with a 1-year extension. Time to close, it's about 60 to 90 days to fund close. So it's a little bit of a longer process because you're going through these banking relationships. You're going through these lenders, these situations where the account is being withheld in a certain location and things like that. The closing cost, 5% lender points. It's built into the loan amount. It's paid on the first tranche / disbursement, in other words, to the borrower. Lender points go to cost, i.e. example, so the insurance wraps, maintaining the line of credit, cost of funds, broker fee. I put a few abbreviations that I was trying to go through there. Normally when I put example and then IE and then I put a few more in abbreviation. And I know what they mean. I just sometimes go through each one of them separately. Interest ranges, they go from 5 to 7%. That's fixed. This is a 5-year term with interest only IO payments. So this is another one here that is available, but this would be of a higher standard and a higher requirement. And normally when you're doing a lot more with those, that's how they would go. So I think that's all I wanted to check. Let me make sure I didn't miss anything on my other documentation tabs. We went over the 50 to 2 billion business line of credit, cannabis as well as one that could work for. And there's no difference for that as in what we just went through. As I look into my other document here, let's see. Okay. I believe I have everything. And if there's anything else I need to share with you, I'll make sure that you have it on hand. Let me see. another document. Okay. That right there will include everything. And those are all the lines of credit. Of course, there are more out there and things that are distinguished with each provider, organization, lender. But for you to get the best amount, but not only the amount, it's understanding one, the education, which you got a majority of it here today, but other things included, like how can you combine different services? Is this the right line of credit for me? If I took this line of credit, would this affect me from getting an approval of this? If they ask for a hard pull, then I got a hard pull. At that point, then I'm trying to get 0% interest cards. Would I be able to then go apply immediately after that? You have to understand all these little differences. And so to conclude with this is the 0% interest. The 0% excuse me. The 0% interest part, that's multiple business credit card stacking. That's, let's say, a line of credit wouldn't work, or you're going to add, in addition to a line of credit, multiple business credit cards, or maybe it's just one business credit card. You have less than optimized credit, or you have optimized credit, but you just ran up your inquiries per bureau, utilization, what you can and can't get from each credit card holder account, and all these other things. But credit card stacking is where, let's say, we're going to add multiple business credit cards strategically. And this is where you're leveraging my expertise as well as my team and you're going through this and saying, well, we're going to add a Chase business credit card. We're going to add an Inc card. And then after that, we're going to add a GM business card. And then the third one we're going to add is a Key Bank card, or Chase Bank of America, US Bank, Chase Bank of America, PNC Truist Bank. We try to go after the larger banks first, so you can get the highest amount of an approval. Chase is very generous. I'm primarily banked with them, and I have other banking locations and relationships, higher tier, regional, lower, and community credit unions. And so a lot of people in this market think that it's best to start off with a community credit union, and I don't disagree with that. But not every person understands your credit. So when you start hearing how, oh, I can go to a community credit union, but then they pull from that bureau, you're going to have to ask yourself, are they going to report this? Will they report it accurately? Because not all the time will they, into the right bureau. So you have to be mindful of how many inquiries, how much utilization, what's your credit age history, how many revolving accounts, have you been making your payments on time, how many payments have you been making lately, what's your highest credit card limit on your personal and on your business side if you have already business, how much on your personal, what's your lowest, what's your average of all, and what's your high. We got to look at a lot of little factors. There's more than those things. And so many people don't understand what they're doing. The very strategic part to this is being able to liquidate the cash out of these cards, out of the 0% more so. Having a balance transfer of that, transferring debt, doing all these other things, that's different. Moving personal to business, and then acquiring more funds in time. But being able to have the right merchant processor, being able to have the right relationships, not everybody has that. So they end up going through merchant cash advance fees, high APRs, readjustable, on top of what you already are taking out at 0%. And that's 0%. So it's very little to nothing there. So you have to account for all those little missteps that people take. And that's why if you want it more of in a convenient, energy and time effective way, I always recommend having somebody else do it for you, more of a done for you, where all the applications are opened up and one by one, where each one won't see the other person's pull or this and that. But doing it strategically, making sure that you go to the right ones. Not a lot of people do. And then later on, they find out whether, oh, I could have got a Chase card for $50,000, but I just took another one and I ran this up and I got to wait now 3 to 6 plus months. Now the Chase rule applies and all. So a lot of people go into problems doing that. And there's more along the ways than just pulling out the cash from them, is understanding how you use these funds effectively. The difference I tell people with myself and everybody else, besides who I am as a person, you guys got to hear about that, earlier a bit, is I know how to help people use their funds effectively. Too many people on YouTube, blogs. Can you tell me how many of these people, one, you actually know their brand, two, business, two, personal brand, but them as a character? Do you understand the character of the person you're working with? How many of you, and I was guilty of this in the beginning when I was getting in my businesses, like character, we were speaking to somebody and we didn't necessarily ask them why them. I didn't ask about why the business. I don't want you to go on and tell me about how, oh, well, there have been 30 customers today and We've serviced people in the construction technology space, and we help people get 75%, and we try to beat the approvals. If we don't, we get you a gift card. And no, I don't need to know about that. I don't need to know all about the USP. Like that's helpful, great. But why you? How many people do you work with that'll tell you, like, I don't always go out of my way and say, you didn't ask this, but let me tell you a little bit about myself. Like, I may at times, but next time you do, bring that up. And so, like with many people, I share with them where I've been, how I got to this. And a lot of people want to help a small business owner instead of a huge corporation. I have people in my email inbox every day that go, Michael, I've seen what is out there, but I'd rather work with you because of what you stand for. I've seen your vision. I've seen your mission. I've seen your values. I see your aspirations. I know what you've gone through. I know what you've been through. I know where you're currently at and how you think. And I'm so grateful and thankful because you're going to help another person out that can give back to the community. A lot of the proceeds here go back to helping people out in the community, putting back a portion of that to grow and expand the business, to also take home, but be able to feed my family, be able to put food on the table for them. And I know I can pray and be thankful. And I'm always grateful and thankful more than I've ever been that I take hold and seize of that moment. And I take my time. I'm very slow and patient. I speak slow because I'm always processing things that others aren't enough of or don't take enough of the time to. I'm the last one to leave the dining table. And people will laugh at me because you're still eating, Michael. And I go, I don't say something, I don't say anything, but they know what I'm thinking. It's like, I'm not mad at them for bringing it up. It's just me. And it's just me being very grateful and thankful. And I look at a lot of the stuff that goes through and I care about you as a person. And honestly, when I look back at a lot of the people, even people who email me and go, hey, remember? I'm like, yeah, I remember you. And we spoke about this, about personal this. You opened up a little bit about that. I don't expect you to open up about much of that. And I'm somebody as an introvert that's hard for me to open up to people, but I think that helps and to a degree. And so remembering that as well as the business situation, it's like, yeah, I remember that. But remembering the person for the person and going like, yeah, I remember you were having a lunch, you were having a breakfast sandwich, you were on your way out the door from the diner and you said this to the waitress. That was kind of funny. And then you got into your car and then you happened to go through and pick up your daughter or something. And that's when you called again. You were waiting outside of the school and all these little kids running around. And it's cool. Those little things go a far ways with me. And I'm very grateful again and thankful that I've been able to help plenty of people. And I never let this go to my head. Every single day I treat it like I'm just getting started for the very first time. It's not about the money. It's about the impact. It's about the value. It's about you growing in your health, in your relationships. And that's what matters for me at the most end of the day, aside of the wealth, aside of how you use your funds, as well as how you can use this to grow your business. Who's Sally? Who's John? Have they become better because of this? Or have they worked on this? Or can we work on that a little bit more? Because that'll help them and that'll be able to break them up and do more for their business, for their relationships, for their health, and other things that affect that. So let me go ahead and see here. Hi, Shant. I'm not sure if you're still in here, but I will go through this. I don't believe I've gone through them and not really, would say, familiar with. May have, but I have to look through things to just refresh my mind on that. But if there's anything more that you would need to discuss about that between them, and also if you're trying to seek other options or trying to compare a few things, make sure which one's best for you, the questionnaire form or in time, I'll get back to you. But you can send me an email. For everybody wondering, I'll leave it in my description down below, but here it is. But the best place to begin is the questionnaire form, which we've run out of time, so I won't show you guys what that looks like. But down below in the description, there will be a questionnaire form you can fill out some simple funding details, go through the thank you page. You can get started on that page. But in time, I'll get back to you on a few things and what to do thereafter. So here, let me make sure I didn't miss any pages. I'm looking through them again. Oh, another thing too to mention is that within certain states, if you have like less than a year or less than 2 years, if your business resides in like New Jersey, California, Rhode Island, Nevada, Vermont, Montana, places like that, then your FICO must be 600 plus and above. But it's not always at a minimum of 600 that everybody's going to be qualified for. We're looking at other things in our criteria: the financial strength of your business, cash flow, average daily bank balances, number of NSFs, negative days, things like that, bounce checks, if anything, and more, etc. So I think, let me see, let me look over on this page. Yeah, we didn't go over too much of the secured lines of credit. I said I would go over that. I might touch upon it here, actually. Let me find the document for that. So I'll go through this part very quickly. It's on my other screen. But there's another option for a secured line of credit that's backed up by account receivables. There could be 2 days decisions. It's accelerated closing up to 95%. I've even seen 80 or 85% of your advanced rate. No industry restrictions. Validity and personal guarantees are then offered. There is no set payment as what comes with lines of credit. You will pay upfront fees to set up the line of credit, and then you will pay the rate when the money is collected, which is normally within 30 to 90 days. Qualifications for a lot of this with secured lines of credit: you'll see 250,000 in aging account receivables is what you want. Normally, it's over 500,000 over the last 30, 60, 90 days is best. Some specific industries would rather prefer that. Or 1 million in inventory. So whether you have unpaid invoices or you have inventory, we can do an inventory line of credit or an AR line of credit. In other words, unpaid invoices, aging receivables, account receivables. We have to look at those. There is no minimum FICO because it is a collateral requirement and it's collateral service. So the credit is not really the requirement. And when it comes to like unpaid invoices, a lot of it we're going to look at how your customers pay you and pay you on time and things like that. No minimum time in business. Facility sizes we see normally 250,000 to 225 million and above. It could be 12 to 24 month terms. Rates start at prime plus 2 to 5%, 2 to 3%. You've seen as well. Documents that are needed. It could be like a 60-second application online, recent 6 months of bank statements, 6 months of recent credit card statements, if you have them, if that's applicable. And the most recent business tax return is normally it. So that's a little bit about that on the account receivables, unpaid invoices. And so that can fluctuate depending on the prime rate. 4 to 7 days application to funding, you could see. So it takes a little bit more, could be with the collateral side. But yeah, that pretty much sums it up. We just went over a little bit of the inventory. Inventory could probably be 7 to 14 days sometimes with that. And you'd have to have $1 million in current inventory and not something that's like out of international, out somewhere else. And you're like expecting to get that. Like, do you have that sitting here within the US or not? And it's just like, it makes it a lot more complicated to help with a lot of that. So that's one requirement. $1 million in annual sales when it comes to inventory. That's what we're looking for. Sometimes if it's a little bit under, we'll still look at it depending on the inventory, depending on if it's fully collateralized. Can we look at that? Can the lender resell that in the case of a default or something else happens? Your time in business, no minimum FICO, and that's it. And that's just some of it. There's other options out there for collateral. But another one that would be great is a cash out refinance for equity liquidity purposes. If you're in a situation where you have property like commercial real estate or investment real estate that you own and you don't want to have to get a line of credit for it that way, then we can do a different collateral. And then we can also do a cash out refinance with equity. And if you have a credit partner or you have a partner that can assist you, they have that. That's another angle. Or if you don't qualify for like the 0% interest business credit card stacking because of credit, then you can look at a credit partner to assist you. And I can give you more of those details in time. So that is going to be everything. Quite a bit of information in this video. Look for all things down below in the description, the questionnaire form and different resources, but the questionnaire form will be the best place to begin with. And for all questions, please leave me a comment. But questionnaire again form is the best place to go and get started. You want to make this as simple and easy of a process for you with an expert who's going to be giving you the best. You can have even something like a PDF to bookmark and reuse. I was having people today telling me via email that, dang, everything that I did was so organized, and they can reuse this. They can bookmark it, reuse it over and over again. And it's so helpful because you can go back there and get started when you're ready to get started. I have a plan that's customized for you, even without looking at documents already to begin with. When there's documents at that point, there you go. You're going to have everything that you need. So appreciate you. Thank you for joining me today. If you haven't subscribed, please go ahead and subscribe, and click the bell notification. Bell. So much talking today. I don't talk a lot either. Bell notification icon so you do not miss any future content I'll be coming out with. And if you enjoyed this video, please give it a thumbs up and share it with others who you feel will find value from it. It can be a complete stranger, a friend, or a family member, or just anybody in general. And if you have anybody you can't get funding, or you can, but in the meantime, you're like, I have a business owner or a friend or somebody who needs funding, and you want them to work through an expert, that's somebody who also does real estate investing, anything on the business side. I have all products. I understand the landscape very, very well through a different lens. I'm in the market. I'm in the trenches every single day, and I'm a business owner who runs multiple businesses himself in the digital marketing agency, lead generation business. Had that one before this one. Health affiliate marketing, helping people with vitamins and supplements, ergonomic desk chairs, stationary desks. Not this one exactly, but desks, office space, vitamins and supplements. Like I said, back here, seat cushions and many other things. And then other verticals in the affiliate space. I did an e-commerce hybrid with my health site at a point, but I saw a lot of the projection and value in having the blog itself that I started. So I went back and reverted to that. And then also other ventures. This has been my primary focus as a business funding expert, pre-underwriter/underwriter. So that'll be everything for now. Appreciate you. Thank you for joining in, and talk to you on the next one. Take care.